What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Devan Nathwani, portfolio strategist in the BlackRock Investment Institute. This week we discuss how we're adapting our strategic views to a world shaped by supply and structural forces. The US election result reinforces our expectation for persistent inflationary pressures and high for longer interest rates. We evolve our strategic views on a horizon of 5 years and longer due to this outlook. We think stubborn inflation will force major central banks to keep interest rates high for longer. As we expected, private equity and real estate valuations have cooled from their recent peaks as financing costs rose with interest rates. We see more attractive valuations and healthier deal activity in infrastructure equity assets. We also see megaforces benefiting infrastructure. These are structural shifts impacting returns now and in the future, such as digital disruption and artificial intelligence. We're in a more volatile macro regime. President-elect Donald Trump's policy agenda reinforces our expectations for persistent inflation in the medium term and for interest rates settling higher than pre-pandemic. We remain dynamic with our strategic views. We reaffirm our preference for short-term over long-term bonds in the US on a strategic and tactical horizon. We expect long-term yields to rise as investors demand more compensation for the risk of holding them, given sticky inflation, persistent fiscal deficits, and more bond volatility. We continue to favor European government bonds over US Treasuries, where we expect interest rates to fall more. Here's our market take. We upgrade growth private markets to neutral given our preference for infrastructure equity. While the long-term outlook is uncertain, we're more pro-risk on a 6 to 12-month tactical horizon and lean into US equities. That's supported by a more favorable macro backdrop for risk-taking and upbeat investor sentiment. Over a strategic horizon, we prefer emerging market stocks due to their more attractive valuations and favor countries like India that sit at the cross-current of megaforces. We like Japan within developed market stocks over the short term and the long term. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com